Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey, ladies and gents, welcome back to the Future of Supply Chain podcast. I'm your host, Santosh Sankar, and joining me today, calling in from Mexico City, is Jaime Tabachnik, co-founder and CEO of Solvento. Welcome, Jaime.
Thank you, Santosh. It's very exciting to be here today.
So I've waited 3 years, nearly 3 years for this episode. And I want to give you a big welcome to the show, but I'm excited to dig into Solvento here today at detail with that and kind of give our listeners an understanding of what you all are doing around automating, but also providing logistics payments to the industry, both in Mexico, but I also know you have your sights set on broader LATAM as the years pass. But with that, I'm a very proud first check investor in Solvento. I would love to open up with, what is the Jaime Tabachnik story? How did you end up kind of in this world of, call it logistics and payments of all things, this interesting intersection?
I definitely did not expect to be right here when I was younger. So I'm a civil engineer, son of a very successful entrepreneur who I think most of my character and the ambition I have to be very successful in the entrepreneurial world. And I learned a lot from him. When I was little, I remember one of my first memories was my father going out delivering electrical supplies personally in his trunk of his car. And definitely he was an inspiration, but he was able to grow his electrical supply distribution business. And to be honest, I always envisioned myself taking over that business. When I was in college studying civil engineering, I started my first business, which was actually a CrossFit gym that ended up becoming a CrossFit gym chain. We had 6 different locations, learned a lot about business 101 there, made my first mistakes. And when I graduated from college, I decided it was time to give it a shot and work in this company that my father had built. And since I studied engineering out of, to be honest, I did not have a lot of reasons to study civil engineering, but it was the one that interested me the most. My father asked me to take a look at the supply chain of the business. Since he was very, very heavily involved on the commercial side, he asked me to take a look at the supply chain. And this is a business that has a footprint all across of Mexico, that has a fleet of their own and also outsources freight services, and has a very complex warehousing operation. So I was 23 years old and started my journey and my romance with supply chain. To be honest, I was very impressed by the complexity of it all. And I was humble enough to ask my father to let me hire a consulting firm. And this was the best decision because it was kind of masters in supply chain with very real life use cases that we applied every day. And to give you, to make a long story short, we started and I spent most of the time in this company implementing software and technology that would make the company supply chain more efficient. And we started with warehousing. We implemented warehouse management software, Blue Yonder, one of the best in class. Then we went to inventory optimization, and we implemented software, also American software. So I traveled to a lot of the conferences in the US. And the last 2 years, I spent them getting very deeply involved in freight and in trucking, because we moved 100% of our goods on the road, and we had thousands of deliveries every month. So we had a very complex distribution network, and we implemented Mexican TMS, and I was also responsible for developing new carrier relations, and well, I got my first piece of experience in the freight, and more specifically in the on the road freight world. When I was 29, I decided to quit. It was a very surprising, probably the most difficult decision I've made in my life, because I was on the road to become the company CEO. But I had this feeling inside me that I needed to prove myself out there and start something from scratch and learn more. I didn't feel like my professional journey was defined as it was, or as I thought it was. So I quit, knowing that I wanted to develop in the frontier of freight and technology. And I had built a very, very powerful and deep network in the freight tech ecosystem, both in Mexico and in the US. And I was lucky enough to get an offer when this good friend that actually was a vendor who helped us implement Blue Yonder in Mexico and also sold us a TMS. He had the vision of building the Mexican Uber Freight, or the Mexican convoy for intra Mexico. And he offered me, he saw in me a good profile to lead that initiative, and he hired me to be the CEO of that initiative that was called Bees Logistics. And here I did my PhD in trucking. We were leveraging on the TMS to build a marketplace and spend most of my time figuring out the greatest pain points that carriers had in Mexico, so we could convince them and we could build a value proposition that was strong enough to change the status quo, and instead of them working directly with the shippers, brokers, for them to come to a digital platform like the one we were
Sure.
building. So talk to hundreds of carriers, Santosh. Talk to probably north of 200 different carriers of different sizes from different geos in Mexico. And this is probably the first time and this was totally a serendipity, because I was truly not expecting that over, let's say, 95% of them answered that their number one pain point was related to cash flow and working capital. That
Yeah.
was a true shock for me, because I was expecting the value prop to be related, or I'm sorry, the main pain point to be more related to operational issues, to demand generation, to security, but it was very clear that the main obstacle they have for growth and for a to grow their businesses, to become a bigger, better players, to adopt technology, was working capital and cash flow. So that was my aha moment, and where when I decided this was needed to be a pure fintech play. I believe that there are some digital brokers or digital freight forwarders that have a vision of building some financial solutions in their ecosystems. But since the inception of Solvento, I was sure that we needed to build something so industry specific and best in class that we needed to be incredibly focused. So that's how Solvento came to be.
So today, you and the Solvento team, including Pedro Billy, you built a team that's probably what 30, 40 strong thereabouts. Is that,
Yeah,
am I remembering correctly?
we're 48 actually as of today.
Okay, that's awesome. Um, And so, how do you talk about or describe what Solvento is now? Right, you've kind of come from these really interesting roots, and you've kind of shared how you discovered this issue around cash flow and cash flow constraints in logistics. How do you discuss Solvento today?
So Solvento is building the infrastructure that unlocks the flow of money in the on-the-road freight industry. We were born with the idea of helping leveling the playing field, so SMEs that actually make up for the grand majority of players in this industry can have the tools to grow their businesses and to work with the best carriers, with the best shippers and brokers out there.
Mm.
We're doing this with, we divide our solution with two pillars. The first pillar is a software pillar, or the vertical SaaS pillar, and the second is the embedded finance pillar. As of today, we've been able to build a freight auditing solution that is very seamlessly integrated into a quick pay solution. And how these two work together is incredible, because I'm going to quickly describe to you what's the status quo and what's the
Please.
usual way uh, an interaction in the underfreight world is in Mexico today. So let's say a shipper or a broker, because in Mexico, a lot of the shippers hire carriers directly, have an agreement with a carrier, hire them for a load that, let's say, it's gonna be moved from Mexico City to Monterrey. So that, let's say that load is booked today on Monday, April 8th, and that is a load that is delivered tomorrow. That's delivered on Monday, April 9th. But trucking is a highly working capital intensive business, because the carrier needs to put the money up front for gas, maintenance, and everything needed for this service to be concluded successfully. And on April 9th, the carrier needs to bring back the evidence, or the famous proof of delivery. And
Yep.
in the majority of cases in Mexico, this proof of delivery still is required physically. But
Mm.
now this proof of delivery is in Monterrey, and this carrier needs to find another load to come back. So the carrier has to take a decision. Do I wait to find a new load and then come back and then submit my documents so my collection processes can start? Or actually, a lot of them go to DHL or FedEx, and they actually pay to ship this paperwork overnight. But a lot of times they just take another load from Monterrey, let's say, to Querétaro, and then from Querétaro they need to drive to Mexico City to give back this documentation. So that's the first pain point that's really, really, really inefficient. Then the auditing or the conciliation process starts, which all the companies in Mexico are still doing it manually. Literally, a bunch of people sitting around a table doing manual reviews of documents, which is crazy for me to believe that with the
Yeah.
technologies that we have access today, they're still doing it this way. And this, with the market research that we've done, this process takes an average of 10 additional days. And when this process is concluded, the credit term starts. So the carriers are going to get paid if they have an agreement of getting paid after 30 days. They're in real terms, they're actually getting paid in over 40.
Yeah.
But the other very different thing with Mexican freight and the US is that factoring is not an instrument that is available for carriers in Mexico. It's available for some of the very large carriers, but for the SMEs that account for over 95% of the companies, they don't have access to credit. And when we say credit, we are also referring to factoring. So all these set of a reality make it really, really painful to operate in this ecosystem. So what we're doing with Solvento's freight auditing solution is we're digitizing the recovery of the proof of delivery, and also the process to audit and validate if the delivery is successful, if the rate is successful, if all the accessorial charges are aligned with the agreements you have with each carrier. And
Sure.
by the time that proof of delivery and invoice is validated or audited, it triggers the quick pay solution that we built so that carriers can actually start getting access to financial solutions and can recover and can collect. Probably our record as of today has been 6 hours after delivery, but we're
Wow.
aiming for minutes.
Wow. So I'm going to lean in on that aspect around lending and financial solutions. Uh, the big win at Solvento last year, or I guess one of the big wins, was the $50 million lending facility that was closed from our friends at Lendable. A lot of our audience here isn't that familiar with what a lending operation looks like. And that's where Solvento is really interesting. You not only have the SaaS around the audit, but you can also extend kind of this quick pay capability. Could you detail that for us, kind of what this all actually means as a business?
Absolutely. So well, there was a lot of hard work put behind it, but and we feel very lucky to have found an amazing partner like Lendable that helped us structure what's called a warehouse facility, uh, and how it works in very simple terms. So we have this pool of money that we have available to extend to our customers. So anytime, and we built credit products. In this case, the credit product that we are scaling the most is quick pay. So cash advances to carriers that have successfully completed loads and deliveries. And how this works is this company or this global lender called Lendable on the road our ability to understand and predict risk in the ecosystem. And since before structuring this facility with Lendable, we had very very good behavior in terms of how our loan book and the cohort of customers had paid us back. Because in any credit business, this is very simple to understand that in a credit business, your inventory is money, and
Yeah.
you're giving away money or lending it, expecting it in return. And the most important risk you have is not getting that money back. And there's a lot of different ways how you can structure your credit product to mitigate that risk. And these warehouse lenders like Lendable underwrite your capacity to scale a lending business with a risk profile that they feel comfortable with. And they offer you a facility that you can use to optimize your capital structure and not use your equity as a company to actually extend those loans into the market. So we have a big muscle with this warehouse facility that's up to $15 million that we're using to scale our quick pay capabilities in the Mexican ecosystem. And this way, we are able to pay carriers or offer them this solution that immediately after the auditing process is concluded, with a simple click, they can get their money in their bank accounts.
And briefly here, kind of give us a sense of what do loan sizes look like? What type of rates are we talking about when you're offering this type of solution?
The average size of our loan is $800, which is, this speaks a lot about the type of loads and the profile of
Mm-hmm.
carriers that are being attracted to our service at the moment. The rates that we usually operate with is an average of 3% per advance, which is usually a 30-day tenure. So you can make the math to translate this to an APR. But usually, these, in my perspective, short-term loans as quick pay is they're not as comparable to long-term loans and long-term rates and APRs. And a great
Mm.
analogy and example is the willingness to pay that we have for short-term solutions to big pains,
Yep.
like paying for if you go to an event and they're going to charge you $50 for parking for a whole day, you just want to solve that pain and you pay $50 for your parking. But if you're hiring a pension to park your car every day, you're probably not going to pay $50 a day. So this is more of a relatable to the first solution, where this is a quick solution
Yeah.
for very short term pains that these SME carriers that don't have any other option are getting an incredible boost in liquidity.
Yeah. And for the audience listening, we spent time really digging into this when we were originally investing, and there's really no alternative. The alternative for this market are loan sharks, right? And that gets into kind of a whole kind of different set of issues. But now they can turn to somebody who's a partner who they can grow their business with too, at Solvento, who can provide them kind of this type of short-term cash availability, so they don't need to perhaps skip paying bills, right, or enter some type of financial hardship because the
Or
business
even
they run
like
is backwards on cash.
investing in maintaining their trucks. Like
Mm-hmm.
in Mexico, we have another reality, which is the average age of our trucks is much larger or much greater than the average age in the US. I think the
Yeah.
last time I checked, average age here was around 13 or 14 years in average. So
Wow.
we have very old trucks moving through our roads. And if we don't give the access to liquidity to our carriers, and more so, and I'm sure we're planning to probably speak briefly about the nearshoring phenomenon, but we really need to unlock money into this industry to embrace this giant opportunity.
On that point, Jaime, right? Taking a step back, give us kind of broad strokes about the Mexican trucking industry. How large is it? How many truckers, carriers are in there? Who are the notable shippers? What's kind of the dollar value of freight, but also kind of the transportation bill that we're talking about in this part of the world?
So I've seen different market research reports around this. And I think that a safe average is that the dollar value of the on the road freight industry is around 80 billion US dollars. And we have 200,000 companies that are registered under the SCT, which is the Secretaría de Comunicaciones y Transportes. That means that you have a federal right to go on the federal highway system. So, and out of these 200,000 carriers that are registered, 95% of them have less than 5 trucks registered. If we go to a more local detail, there's a lot of more hundreds of thousands companies that don't have the federal authorization. So on a local level, if you go to last mile and other pieces of this large market, which is on the road freight.
Yeah.
This is an industry that on the demand side is ruled by the shippers. I think that CPGs make a big and a very important percentage of the market share on the demand side. Also, the oil and gas industry and the movement.
Yeah.
We have a very important movement of oil and gas on the roads too. And then we have the food and beverage industries, which are also make a very important market share on the demand side. But then we, of course, have this very important phenomenon we are experiencing with nearshoring, where a lot of more mid-market manufacturing companies are starting to become more and more important to the marketplace. And what I believe is very different in nature to how the US operates is that here in Mexico, we do have some major 3PLs, but the broker as a figure, the freight broker, does not hold such a strong position and important, uh, influential position in the supply chain like it does in the US. There's
Mm.
still a lot of direct relationship between the demand, the shipper, and the carrier.
And so from what I'm hearing, nearshoring's happening. It's well on its way. I'd be curious, like, what is your framework, or how do you see this kind of unfolding over the next decade? Because the thing that in the U.S. people are trying to figure out is what's really happening, and how quickly is this kind of trend going to change the supply chains that we're used to today and bring things that maybe were originally in Southeast Asia closer to home to our friends in Mexico.
Yeah, so nearshoring is definitely happening. It's unbelievable how every day we have a headline of a new major investment that's happening in Mexico, related to the nearshoring of a supply chain, of a major company. The reality, though, and I think we need to be careful with the thing that these announcements, the majority of them have not initiated. And this is something that we need to be careful and we need to be very disciplined around. So, to give you an example, and one of the most famous headlines is the announcement of the new Giga factory of Tesla that's going to be built in Monterrey. There's no work done yet to build that factory. That's about to start. So, what I mean with this is, I think that the effect of the investment in Mexico is going to start being felt in the next couple of years, probably 18 to 24 months, till we start feeling that very sharp increase in demand. I don't think that in the next 6 to 12 months
Mm,
that is going to be that palpable, since these huge investments are going to take some time to be built, and for these facilities to start operating, and for this capacity and trucks be needed to actually move goods into the US. So it's real, it's happening. I just want to be very mindful of timing and when the actual spike and increase of demand is going to start.
sure. So I'm going to progress a bit further here. When I step back and I think about my peer VCs, there are definitely VCs out there who avoid lending models. And at Solvento, we have SaaS, but we also have this technology driven lending capability that you mentioned. Why are these VCs wrong to ignore lending? They say they're fintech, but they ignore lending, or for whatever reason, even if they're generalists, they might shy away from those startups that do lend. I'd love to kind of hear your counter or your appeal to them in order to reconsider, because I think there's a lot of valid things that you have outlined, and it's allowing you to build a really fast growth and highly defensible and durable business at Solvento.
To be completely honest, and I don't want to be rude, I think that a lot of VCs don't get lending. And I think that not understanding something deeply is a very reasonable idea not to invest in it. So, and I think that's probably one of the first and main reasons why a lot of VCs don't invest in lending, because, to be honest, it is complex. It
Yep.
has a lot of nuances. It has additional risks, and there is some cohorts of failed lending businesses in the US and both in Mexico that probably have set some reputation that is not in line with the appetite of some VCs. But
Mm.
I do think that there are some very important nuances on lending businesses in emerging markets and lending businesses in mature markets.
Yeah.
Lending businesses in emerging markets are the best wedges to acquire customers. Why? Because there's a huge gap in access to credit, and companies need money to grow, and that's no secret. So for a startup to have the capability to offer credit is a very, very unfair advantage to grow and to acquire customers in emerging markets. Secondly, margins in emerging markets for lending businesses can be very, very attractive and even comparable to SaaS businesses. In our case, our margins are north of 50%, our gross margins in our lending business. And obviously, you need to take into account losses and all the risk. And in our case, and in the number I'm telling you, we're including that.
Yep.
So I do think that in the longer term, you need to have a vision as a startup to become capital efficient, because lending businesses can be very capital inefficient or very capital intensive. And that's something that I believe that VCs can be very careful about, because they want their US dollars or their investment to be productive and to be invested into R&D and to build incredible and transformative products, and for them not to be working in a loan book generating returns on a lending business. So I think that as you grow as a lending business, there's a lot of creativity and a lot of ways where you can optimize your capital structure and become as capital efficient as non-lending businesses.
Well put. Um, I have a couple more here, right? I've always been wondering, and this is probably a statement we made to you when we gave you the original term sheet, but building a lending business is not for the faint of heart, right? You're always raising debt or equity, and nobody knows this better than you, at least inside the Dynamo portfolio these days. What's the source of your motivation, right? How do you kind of wake up every morning and you go get after it? Because you have this undeniable hustle.
Well, I think, Santosh, that what drives my motivation is the opportunity that I feel very lucky to be in it, to really make something that is transcendent and can make history in the industry that we are targeting. I don't think that there are many cases where the right people are solving the right problem at the right time. And I think that in the case of Solvento, we're lucky to have those three things aligned. And that gets me very motivated, because now I think that we need to put the hard work, we need to continue grinding, we need to continue hiring amazing, talented people, and people that are even way more talented than us founders. And I think that we have the opportunity to really, really make a huge change in the Mexican economy, because we know trucking, we like to call it the backbone of the economy, and more so in Mexico because we don't have a lot of rail infrastructure. So really, trucking is what moves this country, and timing with the macroeconomic tailwinds and how much this infrastructure is needed for Mexico to thrive gives us the chills. I think we're very lucky to be in this position, and there's no great success story with a lot of luck in it.
Awesome. Well, this is my last question for you, and I call this rapid fire. So I'm going to make a statement, and just for 5 seconds, share whatever's top of mind. You ready?
I'm ready.
First up, security of supply chains expanding into Mexico.
I think it's very important not to take that topic lightly. I think that's one of the biggest threats we have of all these nearshoring phenomenon not working. I think we need to make major investments in security, and I do think that the U.S. government needs to pressure the Mexican government, not interfere, but I do think they need to pressure the Mexican government to put state-of-the-art security in our roads.
Next up, the Mexican elections later this year.
We actually had the first debate yesterday, and I'm not very proud of the candidate that we have. I think you can relate to that.
Yes, I can.
Oh man, to be honest, I'm not very into politics. I'm very involved, so I really hope that the person who wins, that I think everyone says that Claudia Sheinbaum, so Andres Manuel AMLO's right hand, is going to win the election by a landslide. I only hope that they don't make stupid decisions. Where we are, with a very bad government, and it's because the power, the geography of Mexico, and the timing is stronger than what the inefficiencies and the bureaucracy that we have in our government. I really hope that at least it doesn't get worse, and this populist rhetoric doesn't get Mexico into a place where other Latin American countries have been. I'm
Sure.
optimistic, though. I do think that having the U.S. as a neighbor and the private sector being so strong in Mexico, it's a good enough base for us to defend the great things that we have going on right now.
Last up, the rate environment here in the U.S. as somebody who's in the business of lending.
Well, I think that we are at a point in time where we can argue that we have very high interest rates. We're expecting some declines. Probably also it has to do with the election cycle. I think I don't think, and we don't expect them to go as low as they were in 2021. Like, I think that was once in a lifetime, and I don't even think that's healthy for the longer term. So I think they should go down probably 200 basis points in the next 2 years and probably stick around that number. We still think that we've built a business that is very profitable on a unit economic basis, regardless of the interest rates in the U.S. Although It's very important for us to look for diversification of our debt partners and work with debt providers in Mexico too.
Awesome. Well, with that, Jaime, thanks a bunch for joining us here, educating us on not just kind of the Mexican freight market, but a lot of the details around freight flow, but financial flow that goes alongside it, and how you're looking to capture that opportunity with the team down in Mexico City.
It's a pleasure, Santosh. Loved it, pod. I also was eager to participate, and I'm very thankful for that. And I'll see you soon, man.
Awesome.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.